Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you can stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I just want to talk to you about my thoughts on Tesla joining the S&P 500. If this is your first time joining me here on the channel, go ahead and hit that subscribe button, and you'll be notified every time I upload a new video. And guys, if you could, go ahead and hit that like button. Really helps my information and my videos get shown to a lot more people to help them on their financial journey. So yes, Tesla, the long-awaited first-round draft pick, is going to the S&P 500. And if you've watched a lot of my investing videos, you know how much I like to invest in index funds, S&P 500, total stock market fund, S&P index fund. I enjoy it all, and I think it's a sound investment. But what does Tesla joining really mean for this product, for this investment? Well, we know S&P 500 is one of the key indicators next to the Dow and next to the NASDAQ that economists use to get a pulse on the economy. But as we also know, this year has just been remarkable for Tesla as far as how their earnings have grown, not just in this year, but just as it adds to their legacy of what they've been building over the past few years. This year in particular is unique because in the S&P 500, a lot of the key drivers when COVID happened, why the S&P 500 was still performing, was really because of this tech stock. You got your Zooms, you got your Facebook, you got Google, all those different companies were increasing during this time, and it was enough that from a profitability standpoint, it actually drove the S&P. So what does Tesla do? Now let's keep in mind what the index fund, the S&P 500, is trying to do. The goal of the S&P 500 is not to beat or outpace the stock market, it's only to keep pace with it. So from time to time, companies get sometimes washed away, but the goal is not overall aggressive returns. It's just to keep pace with the stock market. And statistically speaking, it's been proven that investing in the index fund consistently, not only because the fees are low, but index funds tend to outpace most mutual fund performances. So that's why it's becoming ever so popular, because of the performance, but then also the low fees and just how easy it is from an investor standpoint to join in. So now you have Tesla. If you haven't heard of the car, Tesla is obviously this model electric car that's really taking storm. They don't really have dealerships. They make their cars to order. They really took a different slant on how they approach the car buying space. Thus, it's really taking forward. They do put out a quality vehicle, and obviously they've done well from a company profitability standpoint. But what does adding this company, or this is just an example, what will adding this type of company to the S&P overall do anything? Well, sure, data points that historically when you add a company like this, you might get an initial spike. But over the long term, it really just evens kill. It doesn't really have any major effect, which would be interesting because we have to keep in mind, number one, Tesla in the S&P 500, there are 500 companies. So Tesla is just one of them. So then we have to look at how much weight will Tesla have. This has to be determined. But we know it's not going to be 50% or 40%. No, it's going to be a small percentage like others. Tesla, though it's kind of built off technology, it's still in the automotive space. So it's the different avenue than Google, Amazon, all these different carriers when you look at what encompasses that full index fund. So what does this truly mean? It means that from an investor standpoint, this is a great way to increase and stabilize and strengthen the returns that the S&P 500 has been giving for 50 plus years. It means that, yes, when you're getting added to that group of stocks, you're getting added to enhance the performance, but not from a growth standpoint, but from a sustainability standpoint. So Tesla, what does this truly mean as an investor? What are things that I'm looking at? Well, again, I track the index. I enjoy investing in index funds. I'm a big advocate for it. But if I was looking at a single stock, Tesla is a good single stock. It was better to buy years ago, but again, who can predict what it will actually do? And even now, if you bought it as a single stock, I'm sure you'll get some return off of it. But it's one of those things that you would have to watch, and you can't expect what it's done and the growth that it's had to be your particular growth. So adding it to the S&P 500 puts it in a good space where it can not only do well from overall performance standpoint, but for you, the investor, if you're in the S&P 500 investing, you can get some of the benefits of the growth that is happening, that it can help, again, keep that average 10, 11% that the S&P has been doing for the last 50 plus years. This can be a remarkable time for you as an investor, but it's also a good thing to understand that just adding this one company will not change dramatically the effect of what performance the S&P 500 actually does. It's important for you to understand the things as this company, you've seen it and you may have confidence in what its ability to do as an investment, but it won't overtake everything. Because to be honest, if Tesla was the key profitable company in this S&P 500, it cannot drive everybody else failing. It would have to take a larger portion of the S&P 500 to do that. And because they're just now adding it to the S&P 500, let's see how much share of that S&P 500 you'll get. But this also begs to differ, or begs the question, do you know all the companies that are in the S&P 500? Do you invest in the S&P 500? If you have a moment, share a comment down below that lets me know, what do you actually invest in? Are you pro index fund? Do you have some index? And if you do invest in index, what do you actually know about the index? What companies do you know that are in there? Here's a question that when I was first investing in the index, not everyone has equal share of that, of the S&P 500. Some have a larger portion, thus their returns can impact the performance of the fund. So it's important as an investor to know what you're putting your money in. And you know Tesla, but do you know the other 499 companies that are in the S&P? It's a great thing, but ultimately you have to understand that one company added to the S&P doesn't overall affect. As an investor, you'll see that initial spike, but over the long term, it won't affect the overall growth trajectory. I hope you guys enjoyed this video. How are you investing? How are you on your wealth journey? If you haven't already, please subscribe to the channel. And oh, by the way, you still have an opportunity down below in the description to start your Webull account and deposit $100, and you can get up to 3 free stocks. Some may have a chance where they can be worth up to $1,400. So you see, when you invest in the Webull account, it is giving you the stocks at random, but that's still money in your pocket, more that you've gotten for less money. You deposit $100, get 3 stocks. So check that out if you have some time, if that's something you're interested in. Hope you guys enjoyed this video. If you haven't already, please subscribe to the channel. I can't wait to see you guys in the next video.